Hello everyone, welcome to Layman's channel once again. Sorry I've been off lately. I've been really trading this last couple of months, so I didn't really get the time to drop some of my videos or respond to some of your comments. I apologize for that. Okay, so today I'm going to be discussing a topic that I've always wanted to discuss, and it's something that have affected me greatly this last couple of months as I was trading. And it's no other thing but what? Slippage. Now, slippage is a term that most Forex beginners haven't heard because it's not something that you're going to experience, especially when you begin trading newly. It's something that you experience when you begin to trade more often. That's when you'll be really affected by slippage, and it's very important for you to understand what slippage is because it's going to affect you a lot. Do you understand? If you don't get it, you need to understand it. Now, what is slippage? Slippage simply means an execution of price that is either higher than, for instance, your stop loss. If you put a stop loss at this level, but price now goes and stop you at this level, what happened there is a slippage, and it mostly occurs when you have this kind of long candle, this kind of surge, this rapid price movement that just cuts through everything. Do you get? Now that's what slippage is, and most times you just incur more losses. Now the good side of slippage, that's if at all there is a good side. The good side of slippage, according to some of the customer care I've spoken with, is if your take profit is here. Oh Christ. If your take profit is here, right, and there's a slippage, it means your the price that will be executed as your take profit is going to be somewhere here. For instance, if it's somewhere here, it means you have more money, right? You made more money on that particular trade. But the deal is, throughout this couple of months that I've been trading and experiencing slippages, it has never been in my favor. So magic, magic. Now let's focus on the downside, since that is what has always affected me and most brokers apparently. Now, most forex brokers use liquidity providers. Liquidity providers are people that provide us with some of the prices that we use. Sorry, some of the prices that we use. So let's say, for instance, within this particular market session, let's say within this market section, prices was within the range of um 2401 and 3376. Your brokers have not yet provided prices that are this range and within this range. And that's why when you are executing a trade at this particular point in time, and then you put a take profit that is somewhere, for instance, if you're opening a selling position, right, and your take profit is somewhere here, you realize that that trade would probably not fall through because like it will not work. They'll tell you that that price is not available, or some providers will just show you error, and that's just it. It's not going to work. Same way, if you put your stop loss too far above this place, they'll still tell you that that price is not available because your liquidity providers for your broker have not given them that price. So that price is not yet in their server. You can't execute that price. You can only execute the prices that are within your purple line. Now that's what leads to slippage. Now, for instance, prices in the forex markets is controlled by buying and selling. Do you understand? Now let's say the last person that sold, sold at this point. Then Elon Musk came with his sabi, comes with maybe 1 billion and then buys at this price, sets his order maybe at this price. Price is going to move. Like, that's what happens. That position is going to be filled because there is an order there that is, heavy. Do you understand? And sometimes maybe this is his target. Sorry, this blue line is his target, right? He now buys into this market, or maybe one of those big banks now buys into this market. Your price will now cut through your purple circle and goes where your blue line is. Now, all of you that have your stop losses slightly above this place, it's not going to be filled. Most of you will get filled at, let's say, at this point. This is where most people are going to be filled, depending on how fast your liquidity provider is for your broker. That's what will lead to slippage, and you will now lose more money because, for instance, if your stop loss is supposed to have be $10, maybe you close out that trade losing $20 because prices have moved past your stop loss. It's not yet, it wasn't filled. Now, how do we avoid this kind of scenario? I've watched a lot of videos where some intelligent people spoke about it, but to be very honest, it just didn't make any sense to me until I had to go and search some of those brokers online. Now, I realized there are some brokers that offer the guaranteed stop losses. Guaranteed stop losses, whatever price you put as your stop loss, no matter the market condition, even if there's a surge or there's a high volatility in the market, your stop losses will be guaranteed. Now, the problem is when I checked most of these brokers, it was just, I mean, they didn't accept Nigerians. So that's that. I don't know why the world hates us lately, but they just didn't accept Nigerians. The ones that accepted Nigerians that I used, and I think they are my favorite, is the Easy Markets brokers. Easy Market is so amazing. They offer high leverage, about 1,000 or even 2,000, I think. So you can trade bigger positions with smaller amount of money. You get. Then we have the capital.com, capitalmarket.com. I think let me show you that app, that broker. Yeah. So here they are. We have capital.com. They also offer guaranteed stop loss. Now, the difference between capital.com and easy market, let me use this two as an example of the different guaranteed stop loss providers. Capital market, now you offer a certain amount of money of dollars, maybe $1, $2, do you get, for your guaranteed stop loss. But then easy market, it's going to give you a wider spread. So for instance, let's go to my trade so that I show you something. For instance, you can see that my providers are the easy market, right? That's their logo, easy market live. Do you get? Now let's look at my spread here. My spread for pounds USD is 1.2. You get? Now let's go to OctaFS. Now when you look at OctaFS price for pounds, is very low. The spread is 0.7. So you can see that the easy market spread is about 1 pip more than OctaFS. Now the reason is because they have factored their guaranteed stop losses in their spread. So no matter the time of the day, easy market spread is going to be higher than the spread of brokers such as OctaFS and all, because OctaFS does not give you guaranteed stop loss. So you may be more affected by market volatility and slippages. Do you understand? So that's what slippage is. Just go with brokers that guarantee your stop losses. That's as simple as it gets. Don't Maybe there are other strategies out there that I'm not aware of, but for me, this works very fine for me. So, guys, that's it for me today. If you're new, don't forget to subscribe. If not, you probably never hear from me again, which is not going to be nice. Drop your questions in the comment sections. Let me know what you think. If you have other providers, other ideas of different ways that you can avoid slippages, just share with us in the comment sections. All right, guys, trade well and prosper. Have a nice day.